Hey everyone, welcome to my channel. I'm Doris, and today I'm going to be updating you about the impact of Russian-Ukrainian war progress on the financial market in the US. Ever since the conflict between Russia and Ukraine began in February last year, the evolution of geopolitical situation has been inextricably linked to the turmoil in the financial market. Some Wall Street analysts expect the Wagner to increase ATE volatility, soaring treasury bonds and crude oil, and the traditional safe haven assets such as the dollar. Russia's largest state-owned commercial bank said in a statement that the bank and its offices across the country operate as usual. The withdrawal demand has not increased and all operations are in the normal mode, the statement said. Major Russian banks have previously sharply raised the dollars and euro on the morning of June 24th, while suggesting the financial market could be under pressure amid the turmoil in Russia. At one point, Russell Bank exchanged for 105 rubles to the US and 115 rubles to the euro. On June 23rd, the head of Russia's Wagner mercenaries said the Russian Defense Ministry has attacked the Wagner mercenary camp and promised to respond. On the same day, Russian Federal Security Service announced it has filed a criminal case against Prigozhin for inciting an armed rebellion. Ever since, many parts of Russia has been entered a state of emergency and anti-terrorism mode. Armed conflict seemed to be on the trigger. However, the mutiny in Belarusian President Alexander Lukashenko mediation quickly stopped. Later on June 24th, Russian Presidential Press Secretary said the criminal case against Prigozhin will be revoked and he will go to Belarus. Russian media reported that all the armed personnel of Prigozhin and Wagner Group have been evacuated from the Russian Southern Military Command, affecting the global nerve for Wagner rebellion seems to come to an end. As of the afternoon of June 24th local time, the websites of major Russian banks have reduced the ruble back to about 90 rubles to a dollar. At the present, the exchange rate of the US dollar and the euro against the ruble have fallen to around 90 and around 96. In the energy market, the Russian set is basically not affected by this event, so the overreaction of the international energy futures market was quickly suppressed. Only a few hedge funds are still betting, but it is difficult to have a substantial impact on the overall stability of the market. The market is now closely watching the Asian market opening performance on Monday. The Forbes report notes that the most immediate impact of Wagner is uncertainty over Russian oil exports, which should lead to a rapid surge in oil prices. Treasuries will be bought, gold will be bought, and then yen tends to rise in this case. Treasury and dollar-denominated assets will appear certain fluctuations and rising trend, and the ruble and neighboring countries' currency exchange rate may appear a downward trend. It is worth mentioning that the Wagner mutiny also happened in the past few weeks after the US stock rally momentum was broken. All three major US indexes closed lower last week, ending a straight week of gains for the Nasdaq Composite Index and 5 straight weeks of gains for the S&P 500. The world's major developed financial markets, represented by the Europe and the United States, are indeed highly sensitive to the geopolitical pattern of Europe and Russia and Ukraine. The twists and turns of some future market prices in the recent 24 hours is a typical case. As long as the geopolitical turmoil in Eastern Ukraine continues to continue, The prices of global safe havens assets, such as dollars and other currencies, will continue to soar, and the effects of the Federal Reserve continue to raise interest rates in the market will be further weakened by the market risk appetite. In the future, the Federal Reserve will lose the dilemma between raising interest rates to curb inflation and cutting interest rates to stimulate the economy. Thank you for listening. Don't forget to subscribe. See you next episode.